Commercial real estate tycoon says the industry is entering its final stage of grief.
Scott Reachler, the CEO of the commercial real estate giant RXR, told Fortune that we've gone through all the hallmarks in commercial real estate of the 4 stages of grief: denial, anger, bargaining, and now depression in 2023. In 2024, he's saying, hey, now we've seen all these challenges. We're probably starting to move into acceptance. What happened? This is that potential banking crisis 2.0, and this is the potential real estate crisis 2.0. Why? Because there's about $4.7 trillion worth of commercial debt that's going to come due over the next few years. And then 930 billion of that, or just under a trillion of that, is due in 2024. So the banks are looking around going, okay, what do we got to do? The Fed had us at commercial debt was approximately 3%. And now commercial debt, depending on what people are purchasing, is between, 6.5% for a low LTV to as high as 8.5%. If they built a pro forma based on a 3% debt rate, if you double the debt rate and make that 6.5% or 7%, that asset no longer performs. This is why at first he's like, okay, with denial, then anger, now bargaining, then depression, like the world's falling apart. What I think is actually going to happen is that this end of the free money era is going to reset commercial values, and that commercial has to go through some of this pain, which is going to include, and he talked about this too, the cash-in refinances, the selling of assets to liquidate the investor side of the assets. And it looks like this is going to cause more local banking problems because the Federal Reserve, so today, Jerome Powell went and sat before Congress. Do you think they were nice to Jerome Powell, or do you think they grilled him?
They're almost never nice to him.
Yeah. Yeah.
Did they grill him?
I haven't seen it, but I already know what's going to happen. They do their political grandstanding. They get up, they make their point, they grill him, and they say, why are you not lowering your interest rates? Why are you not protecting businesses? Why are you not protecting the economy? Well, one of the sectors that he's currently not protecting is commercial real estate, which is then also not protecting banking. So another article that I looked at talked about they think as many as 500 local banks out of the approximately 4,200, the Fed stays higher for longer, are going to have to get absorbed. Because as this approximate, 930 billion in debt starts to come due, these banks don't have enough liquidity to deal with that. And then, like we had mentioned before, what's happening is these banks are having to charge larger spreads in order to make up for having to pay higher deposits. So not only is lending criteria tightening, it's getting worse right now. So until the Fed lowers interest rates, this banking problem is going to continue to get worse. And one of the things he really talked about was the reality of this year is that in 2024, the commercial real estate industry is going to have to shift its models, or they're going to have to face the fate that's coming. So the fate is the debt that no longer performs. So that means some of these assets are going to require cash, extend and pretend, or to be sold. Or they're going to have to change how they're doing it. So like office may have to be converted to mixed use and residential. Some of the multifamily, that's just going to get sold because there's no way to change it. But there's no way to tackle these soaring debt levels in multifamily and the more expensive debt without additional cash. So that's the conundrum. What it's also doing though is this is probably creating that once in a generation opportunity in commercial real estate. This once in a generation opportunity in commercial real estate is real simple. The bank has to charge more because they're paying more out. Therefore, interest rates have to go up right now until the Fed lowers the Fed fund rate, which means commercial assets are going to get pinched, which means commercial assets have to be discounted. So right now is that time to build up the cash, to build up the vulture fund, to look for those specific assets that have to be sold under value because they cannot cash in refi. This has not happened since 2008, 9, and 10. And remember, in 2008, 9, and 10, that was mostly the residential side. So it was very few commercial assets that this happened to. So this is a once in a generational opportunity opportunity for you to buy commercial real estate at a discount. And it's going to be a short window. It's going to open and then it's going to close, because it will close as soon as the market responds to the Fed lowering rates.
Are you talking to investors or commercial real estate owners who are experiencing some of this stress in terms of debt loads and higher interest rates?
Yes.
And what is the timeline right now for the people that you're talking to?
I can give you multiple examples, and one of them is my own. So I'll start with my own first. I'm talking to the bank about construction loans right now, and there is a 0.5 point to a full point in additional margin they're asking for that they were not asking for 90 days ago. So that's happening to everyone, because I am essentially what's called a preferred customer. Preferred customer is someone who's done a lot of loans with them, a lot of business, has a lot of accounts with them. So I'm going to get from the bank what the average customer is not going to get. Secondly, there's people's notes who are coming due who are now talking about selling those assets because their notes have to be refied. That was a conversation we just had yesterday. The gentleman said, I'm at a crossroads. I don't like the new rate. He has the equity, he has the money. So he doesn't like the rate. So I'm thinking I might sell this asset and redeploy the capital. Okay, another one that we've spoken with is not in the best situation. And what they said, and this is an investment group, is they said we're going to have to raise additional capital in order to keep this multifamily. So they are currently hunting for additional investors, and they're going to do a cash call to the investors, but they're putting these other investors in backup position just in case.